Welcome back to It's the Capital Call, where we have a keep it simple conversation about real life solutions to real world problems to help you avoid making that dreaded capital call in your business. As always, 100% of the profits generated off of today's episode will be donated to the Empowerment Fund to help support our mission of impacting the world through the power of financial literacy and entrepreneurship. Today, we have with us Jeff Epstein. Jeff, thank you for joining us. I know that we have a little bit of a history, but for those folks that are joining us and listening in that do not, could you give a little bit of background of what has your experience been? Just like 20,000 foot on yourself.
Yeah, Chris, thanks. And thanks for having me. It's awesome to reconnect here. My quick background, or I guess like sort of my journey, lifelong entrepreneur, started companies in college and undergrad, eventually went to law school at a company there as well. Never practiced law and bounced around before eventually starting a company called Ambassador, which was a company that I raised some money with and ended up growing to about 50 people and sold in 2018. And after which I then started my latest company called Onboard, which is a B2B SaaS for customer onboarding.
Love it. And small world testimonial for those listening. Our paths actually crossed back in 2013. So I was running an accelerator program at the time. And you were just, again, like getting back to our core and our why, you get more by giving than by taking. You at the time, you were running Get Ambassador. And we reached out, or one of our startup company, portfolio companies had reached out and they were looking for help. And you were awesome. You were an awesome founder helping other founders, and you gave them that help. You gave them access to the platform. I think you also gave a little bit of support too. So appreciate for that. And yeah, now fast forward, 10 years plus years later, we find ourselves here in this conversation. Love it.
I love it. It's amazing.
So Jeff, a big part of our conversation is to give practical advice to our other fellow entrepreneurs, right? So the best way that we can help each other is by learning from each other's experiences, right? How can we avoid having a problem or the pain listening to folks who already paid those dues? And you've done that. You've done that in a big way, right? You've had a number of successes under your belt, but inclusive in those successes are pains and problems that you figured out solutions for. I know that today we're discussing specifically how you reduced customer churn for Get Ambassador, which is an awesome story. And it also landed yourself in a very clean, clear solution. So I'm extremely excited to be able to get into this. But before we do, can you just give a little bit of background in terms of, for our listeners that may actually not even know yet what customer churn means? What do we mean by this problem? And then how do we, what was your experience in dealing with it?
Yeah, absolutely. And so just for context, software companies obviously have customers, and subscription software companies, like typically they're called SaaS, they have reoccurring subscriptions. And so fortunately for many companies, every time a customer renews, they're paying you again every month. And so when they cancel, that's what people call churn. And it means you're actually losing customers outside, losing customers that you had sort of the month before or the period before. So in any great business, the goal is to have as little churn as possible. And of course, to grow your business, you need more new customers than customers lost. And so, that sounds like it's common sense, and hopefully it is for most people. But when if your churn is high, it becomes really hard to sell more than the people that you lose every month. People will say it's like a leaky bucket, and so it's really important not only to sell more people, but also to continue keeping your current customers happy so that they continue to renew. And if you have both of those things going really well, then that's what creates really like a high growth company that can really stack revenue on top of each other really well. Exactly.
Hopefully that hockey stick, right?
Yeah,
exactly.
Exactly.
That beautiful hockey stick, if we could figure out how to make it. So I appreciate that. And I appreciate the context for everybody listening in. I know that most folks are already on top of this for sure. It's a primary focus in terms of the business, but I mean, to keep it simple, if you can't, if you can't keep your customer, or if you're losing your customers and it costs money to get customers, then ultimately, you may find yourself losing money, right? And if you're not finding yourself losing money, you're definitely not in a situation where you can hit that exponential growth that we're talking about with the hockey stick, the beautiful hockey stick. So huge problem. That's a big why. That's a big why that every founder should be asking themselves every day. How can we reduce our customer churn? Can you tell us a little bit in terms of like the moment in time in which you asked yourself, or when it hit you in the face of, hey, this is a real problem that we have to solve for, and then kind of your thought process and methodology in terms of like really getting to a real solution?
Yeah, exactly. And so I would say as a founder or CEO, as someone who's managing the business, so to speak, it was always something that we measured, right? Like churn was a monthly metric that we measured, and I reported to the board, and in my leadership team we discussed. So it was from the time that I can remember, which was probably after we raised some money and had I personally had the responsibility to report numbers to a board and to investors.
Oh, that's interesting. So you're saying that moment in time, because all of our founders are, we call them investpreneurs. All of our investpreneurs are at all different life cycles and stages in their business. Some are still bootstrapped. Some have gone ahead and raised seed or early stage Series A. And you're really saying that in your experience, the moment in time in which this really became in your face type of relevant was that moment in time where the accountability to others or other people's money came into a factor and you started to think about it, report to it. That's interesting.
Yeah, and to be honest, like I think we definitely kept track of it before then, but I think when it really took shape was, yes, we were reporting on it, but then to hit the certain scale and metrics, if we want to say we want to grow 60% a year or 80% a year, 100% a year, it's a lot harder to do that when you're losing 30% of your customers, which 30% sounds like a lot, but that's like 2.5% a month. And then you're like, most companies lose 5% a month, so it's like when you think about it and it's like, well, we have to sell an extra X million dollars of sales to cover the people that are leaving. That's when it really hits you. And for me, I think that hit me because listen, everyone can pro forma numbers in a spreadsheet, but when you're actually going through the metrics and saying we need to hire X more people to sell Y more dollars, and then you do the math and it becomes real, we're like, well, you could sell this much more, we can reduce churn by 5%. And so that, I think, we were in a hyper growth mode when we raised money. We sold, we went from like 1 million in revenue to 3 million revenue above in a year. So like churn didn't matter that much at that point because we were selling so much more. But as the sales slow down a little bit, or as your numbers get bigger, it becomes a bigger challenge because 30% of a $3 million company is $1 million in churn. Well, that's a lot extra to make up for. So I'm not saying our churn was that high, but like that's how it became the problem. The churn problem became something that we felt like we could manage. In addition to managing sales, right? Like you're managing multiple, there's multiple levers that you're trying to pull to get the best outcome possible.
And that's a powerful statement right there. And I appreciate you for flagging that because we talk about levers all the time on the show. And there's a number of levers in the business. And the most important thing is to identify what your levers are. And once you know what your levers are, to start to pull them. And this is one of the major levers. This is a lever that any business owner can focus on and optimize for. And hopefully they can take this episode and use this blueprint and actually drive something in terms of a real solution. So when you were looking at this as a problem, like what was the kind of like the fundamental approach of how you thought through to solve for it? Like what is the solution? How do you approach solving for churn?
Yeah, so when at first, and I'll walk you through sort of the evolution of it because there were multiple things we did. First you take an inventory is this, are we selling to the right people at the right time? Like we used to have this, like, is it a sales problem? Like, are we not selling to the right people, right? Are we not selling to them at the right time? Are we forcing them to try to use something that isn't ready for them yet, right? And so we first and foremost, we changed our sales process and we changed from a month-to-month subscription to an annual contract. It requires a bigger commitment from the buyer, but it also, in our opinion, committed them to using us and to figuring out how to use us. And we said, well, if they're committing to a year, they will for sure use us. That was like our mindset, right? If they commit to a year, they'll for sure use it. And from a personal perspective, if I commit to something for a year, like I probably will use it at some point. But then when you're selling to a business, if it's not always the case, which we found out the hard way, right? So the first step was we went to annual sales. We did better in the sales process. Our sales team, we thought we like sort of optimized and maximized our output from a sales perspective, and we saw benefits, right? We improved, but we still wanted to do better. And what we found was, again, over time, over maybe a year and a half, we still had churn higher than we wanted it to be. And the problem was, when we sort of boiled it all down, was people liked us, they liked the software, it was a fit, but they weren't actually getting onboarded correctly. And the problem was for us was it wasn't just us providing the details, providing the steps in the knowledge base articles. It was really a lack of what I would consider a lack of a process. Even though we had internal processes, there was no process for them to collaborate with us, and there was no accountability on their side. And that's a weird thing to say, maybe, because ultimately, I think a lot of people like to say, well, if my customer isn't accountable, like, what can I do? And what we realize is that we can surface that accountability. We can show all the people who needs to do what, and then we can share that back with the champion or the buyer, right? Or the person who made the purchase, and we can get them to do things that they should be doing on their own. And so that was sort of a light bulb moment for us, was we can try to manufacture a better onboarding experience and even lower churn, even more so than we had from like the things that we changed in sales, right? So that was a goal that took, I mean, my co-founder at Onboard, Will Stevenson, he was in charge of that, and we, he spent months and months and months creating a great process, but then using tools to make it, organized, to make it collaborative, and then to make it, transparent. I think first, most importantly, and what I always say is like the transparency created accountability in all parties. And that was really great for me, from like an executive level, to say to like the investors, like, this is where we think we're going to be. But like from our client side, is they now were accountable to us, but they were also accountable to the person who was buying. And to step back for one moment, the reason why that's important is, with lots of onboarding, the person who chooses to buy your software doesn't always the person who has to put it all together to make it work. And so if they're not bought in and doing it, then even if they have the best intentions, and even if they pay you for a year up front, you're not going to get the renewal if they don't use it, right? Like after a certain amount of time, they're going to say, okay, this is a sunk cost. We're not going to, move forward. And so in a company like ours, like, we needed those companies that were big, great logos, great brands. We needed them to use it. We needed them to stay. And that was what we were solving, truly, was getting.
You're solving a utilization. Really, it's a utilization problem. If our customers are utilizing it, then they're gonna, if the product is built well and it delivers the value, if they utilize it, they're gonna get the value. If the value is what they were after when they made the purchase, they already know that the cost is less than the value itself. They just need to get there.
Right.
And your whole process and thought process is, hey, Jeff, there is so many golden nuggets in this conversation. I'd like to unpack at least a couple of them, because you started with this thought process of, all right, we have churn, so we have a subscription, and we'll use the case study of most folks, right? Sure. They're charging a monthly subscription, let's say, right? Mm-hmm. Monthly, quarterly. So we're saying, okay, we have a monthly subscription and we're seeing a somewhat of a high churn rate. Now, do we have an issue with our sales process? If we move to an annual sales process, that's less frequency in terms of less opportunities for somebody to make that churn decision. Yes. So if we constrain the opportunity to make a churn decision, then maybe we'll have less churn. And you're telling me that was something that you guys tested out and you validated was the case? Because that's a question that I actually had while I was listening. I was like, all right, so say it's a 1% monthly. When you switched to the annual, was it less than 12% churn? Did you get it down to 10, 9, 8, 7% churn?
Yes. Everything we did along the way lowered our churn. And it sort of makes sense if you think about it this way. So what would happen is we'd have what we would consider like folks that were like wanted to, like marketers love to test, right? Everyone wants to test everything. So they would say, we're going to test it, which is great. But like, we had a little bit more of a formal sales process. We were still doing the same work for someone to pay us, let's just hypothetically say $200 a month as we would for $2,500 a year. And they would agree that, yes, this makes sense to do a test, but they had such a little time to do their own test and to configure everything and to set it up and to execute, that if they didn't get it done, let's say by the first renewal, they might say, you know what, let's do it next quarter. And so we'd get $250 for 1 month or $200 for a month. And then the next month they would cancel.
Yeah.
And we said, like, is it a product problem? Like, we don't think so. The product works. We've seen companies make tens of millions, hundreds of millions of dollars in value. We've seen it. We know the product works. So then it's like, well, are we bringing the wrong people in the door? Like, just because they want to use it, are they actually going to invest? We would say in the sales process is there's an expectation. You're going to have to invest time and energy to do this. You don't just buy it and it doesn't make you money, right? Like, you have to do the work. And with smaller companies, maybe the 250, they don't want to wait a month and they'd rather cancel and then sort of regroup and then come back. That increases your churn quite a bit versus them committing to a year. And then within that year, as long as they get up and running, ideally in the perfect world, and it works for them, they will continue for the next year.
Yeah,
exactly.
It's like an exercise routine, right? If you're getting those results, if you're looking in the mirror and you like what you see, keep doing it. Keep staying with it. Keep paying the gym membership. And that's what you're doing. So that's what you're doing. You're indoctrinating somebody to get to the value faster, so that they actually get to the value and then they adopt and utilize the value and they appreciate the value. So they continue to commit to it.
Exactly. We were trying to force them to get to the value versus giving them an option of walking away. And to me, like, a month to month, if the product's relatively easy, if the product, you just click a few times and it works, then go for the month to month route. If people love it, like with Onboard and my current company, that's what we're doing, because people are sticking and they're staying and they're using right away. It's totally different type of product. But with Ambassador, there was a lot of stuff that had happened. You had to call your dev team. They had to tie things together. You had to test stuff. It was a lot more a work. And, we would say, like, listen, it's an investment of time and energy. Therefore, and here's the cost. We're going to invest our own resources. We had our own customer success team and account manager to help you. We'll walk you down the path. And for that reason, it's an annual commitment, and it's more money. And so, like, we kept raising our costs. We actually raised our costs from like 2015 till we sold in 2018. I think we raised the prices every quarter. And that was like it was like, hey, if people are serious, if they're going to invest, then like the extra X thousands won't matter to them, in our opinion, and more often than not, that works. So like, we were always trying to figure out, how do we find the right buyer at the right time? Like, it was something that we talked about, in the sales team, I think, did a phenomenal job, but it was really important. Like, let's bring the right people in the door, and then let's make sure they actually use it. Right. And those are the two, in our opinion, things that we had the most control of, to mitigate churn, to get it as low as possible.
Love it. Now, something I want to make sure that we do really highlight and hone in on is the fact that this is a problem you experienced in an organization that you had raised capital around, you had responsibilities to your investors with, you have responsibilities to your customers and your team, right? So the whole story, literally the whole founder journey, you were living and experiencing. And this was a core problem that you solved for. And because you solved for it, you brought the organization to acquisition, which is a success, a massive win. And after doing so, you decided to double back as a serial founder, and you launched onboard.io, which is literally a solution that helps facilitate folks like those listening on today's call to solve that problem. Can you take us a little bit through exactly how, like, the science behind how onboard.io would do that? And I want to listen to your process and approach, and how tangential it is to this concept of creating the accountability on the customer.
Certainly. And this, to be honest, this concept, the concept of onboard and the process was born from Will Stevenson, my co-founder at Onboard. because he was the one who ran the success team at Ambassador. And he said, he used to always say, I wish there was software we could use to make this better. Like, our team is great, which we both agreed with. Like, we're organized, we have a process, which most companies don't, right? A lot of people are just winging onboarding. It's not something that everyone universally does. And we tried to collaborate. We had like Google Sheets, and then eventually we used Basecamp. So we had project management. We had a little bit of transparency, like some people could see it, but we ran into problems where people would say, I don't want another login. I don't want to, have to log into Basecamp. And now Basecamp's trying to sell me. Like, am I confused? Do I need to pay for Basecamp? So it became this, like, even though we solved pieces of it and we'll put together a bunch of different systems and try to make it work really well, he was always like, Jeff, there is a massive gap in the market with onboarding tools. There were a couple out there, and he's like, they're not thinking about it right. They're not thinking about custom onboarding in the way that it should be. And what I mean by custom onboarding is every customer is still different. And so you have to be able to identify what makes them unique and give them exactly the tasks and the information and data they need to succeed as fast as possible. And when that is, hey, we do 5 phone calls, like, that's not the right solution, right? Like, you have to make it more automated to be successful. And so, what we ended up with, to get back to your question, Chris, is like, we ended up creating a product that allows you to organize the process. It's collaborative. Both teams can log in easily. And the client, most importantly, can log in through a magic link. So they don't need a password. They don't need it to remember anything. They click a link and they have access to the tasks they need to do. Everyone has visibility into when things are due, to who is assigned for tasks, and all of that together, all of that transparency across both teams creates the accountability. And again, this is my own opinion, but oftentimes when all eyes are on you and they know you are required to do something, then you have the accountability. And I would say the opposite of that situation, which happens a lot, is like, you have an internal email and you say, hey, dev team, can someone please add this code to our website? And it goes into a black box to some dev person, right? And some engineering leader who will prioritize that probably really low. And then when you say what happened to the client, they say, I don't know. I forwarded on to some person that's above me and I don't know what to do. And so we surface that with Onboard. You can see who the actual person is. And it allows for us on our side to ask them, hey, did you get a chance to do this? It allows for a lot of more people to get involved to push, the onboarding process along.
Oh, I've experienced far too many black boxes, for sure, right? Because you're part of a buying team, right? There's typically a number of folks involved, one, an SME, but then other stakeholders making the decision. You get to the decision, you finally sign the contract, and then you get into implementation. And now you're in implementation and you have the blocking and tackling that needs to take place. And a lot of the folks that were involved in the sales process are no longer a part of the day-to-day implementation. They're in some sort of email thread or something. And that line of sight that you're talking about and that accountability, because the transparency isn't there, does go away. It fades.
Exactly. And so that's truly, at the end of the day, like, Onboard, it's for that implementation process. It's the notifications, it's, the area to discuss task level communications, assign, upload, down. It's all the things that you need to do to complete the task and basically do what everyone is being paid to do, is basically get the company using the product they just bought as fast as possible, because that's what everyone sort of agreed to do in the beginning and
get to the value.
First place.
Yeah. So, okay. So would we break it down? So for those of us that are listening to this podcast, we are also sharing screens currently, and we are building our blueprint that will be available to everybody to digest and put to work, right? Because the whole goal here is to identify a real world problem and then a practical solution to it. And I feel like, Jeff, thank you so much for doing this. You've created a tremendous amount of value on today's call, because I feel like you literally got to not only the heart of something that you experienced, but you then literally went and built a solution. So it's literally a perfect storm. I want to make sure that I did a good job myself in accountability into this call to make sure that I documented everything well. What I heard from what we just said was 5 steps, and I want to make sure that that's the case. I didn't miss any. And that literally, if folks just self-identify that this is a problem that they see in their business, they're seeing a high churn. And if they see a high churn and they want to hypothesize one way to potentially solve for that, it may be their onboarding, and that may be the thing that actually has the greatest possible impact on that churn. And if they do find themselves in that situation, then they could ask themselves to go through this 5-step process. First, organize the process around onboarding. Second, make it collaborative. Third, make it frictionless for the user to actually come in and adopt the process. 4, make it transparent so that everybody has line of sight into accountabilities and what needs to be done when, which 5 ultimately drives that core sense of accountability, which really drives the results. And the result is to get to utilization or get to value as quickly as possible post-purchase. Because if a customer is getting the value that they bought, then they're likely going to keep buying or keep paying in a sense. Jeff, is that accurate?
That is completely accurate. And I would say you're exactly right. Like the last part of it to even like tie it up is, if you perform a great onboarding, like you have a happy, thrilled customer now that is going to share, right? Like, and they're going to tell people this was a great experience versus what is often a very painful experience. Like onboarding shouldn't be the worst part of buying something. And so that, again, that is such a great outcome for your company, right? I mean, and so that's, ideally, for me, that sort of is full circle, right? It's the, referral, the onboarding, like those are two things I spent the last, 13, 14 years doing, and they do go a little bit hand in hand. And
love that.
It's good business, right?
For
it's good
folks
business.
at home that are listening, just added a 6th bullet to this, which is after that successful onboarding and the customer's happy because they're getting what they purchased, ask them for that referral.
Yeah.
Continue to make it a virtuous cycle and feed back to the top of the pipeline, which again, you literally started with optimizing at sales. And that's what I'm saying. There's so many golden nuggets on this call, Jeff, extremely appreciative of it. When would somebody at home sit and look at themselves in the mirror and say, this is relevant for me. This is something that I should now tackle. Is there like a moment in time of aha, self-accountability we're really talking about, that this is the right time to deal with this or be able to adopt or push a solution like onboard.io?
Yeah, I think, there, and as a founder and as an entrepreneur, like I understand there are always more problems than time to solve them. And so I think, what it comes down to is sort of picking the highest leverage, solutions, right? What can I solve that'll make the biggest impact on the business for this, this week or this month or this quarter, however you sort of think about that. So I think when there's a time in the business where enough people are saying this is something I want to use or buy, but you don't see the engagement and you don't see them actually using it. Or again, if it's SaaS, if they're churning, then to me, you have to look in the mirror and say, why is it that they're churning? And like take an objective approach, and for us, we determined first and foremost, we don't think it's the product. I think first and foremost, you look at product, right? And then it was like 2, is it the sales? And we thought, well, yeah, maybe we can do some sales differently. So we first looked at sales. And then when we realized, well, yeah, we made sales better and we still want a lower churn, we said, we have to get people using it better. And of course, we also surveyed them. I mean, use the other general tools that you can use, ask people questions, talk to them. Those things are all going to inform your decisions as well. And but it's pretty easy to tell with software, if people aren't hooked up and actually using it, you realize that it's a implementation problem, right? And so for us, we found most of our churn comes from a lack of implementation, AKA they are abandoning implementation, AKA they aren't able to complete it from our perspective, because we didn't have the accountability to push them to do it correctly, right? It wasn't because of lack of resources or lack of time or energy, because they had a year to do it in most cases. It was a lack of really collaborative, a push, and some of it maybe was on our side, but we sort of concluded that we really just needed a better tool set, and we think Onboard does that.
Love that. So you again, just so much value in terms of what you communicated, because you gave literally scoping of stage too, right? So for founders at home that are asking themselves, is this a problem I should solve for now? What we just communicated is, if you've solved your sales problem, right? Like if you've solved your product market fit, you know that you have a product that folks are a pain that you've identified and a solution that people are willing to pay for, right? If you haven't solved that first, but if you have, and you have the sales coming in, right, and you have proof of concept with dollars being spent and invested in voting for your product, and then folks are coming in after purchasing, and you're not seeing inside of the system or whatever you're able to use to be able to track the adoption taking place, then you're kind of starting to inkling maybe we have an onboarding problem here. And then if you really start to cascade it into the metrics and you're seeing a high churn rate, and now it's starting to actually negatively affect your bottom line, and it's affecting your P&L of your business financially, because that churn number is starting to increase and rise. That's when you really need to start to take action and say, this is a hole that we need to plug. And that's the point in time in which you could take that 5-step or 6-step process to potentially look at your onboarding sequencing, optimize around that, figure it out, maybe do a little bit of pre-work, and then take that pre-work and then go and adopt a solution like onboard.io and actually invest in it and then solve for it, because that's the moment in time in which you should solve.
Absolutely. And I totally agree with you as well. Like the best thing that you can do in my opinion, is do the pre-work, set up a process. It doesn't have to be perfect, but you're always, as a business owner, as an entrepreneur, you're always going to be iterating and making your processes better, hopefully, right? Like once you get out of the haze of doing everything by yourself, as you sort of scale the business, you'll have to start re-looking back at things and saying, can we do this now a little bit better, 5-10% better than before? Because those incremental changes add up, right, to push the business. So do it yourself first, learn, and then you buy up software to like really make it super efficient. And I think from my perspective, that goes for almost everything, in every part or like deep function of the business. Is software usually is a good investment. It seems like a lot of money at times, but again, like it's usually you're trading time for money for time, and it's usually a good trade. So you kind of want to do that.
Talk about leverage. I appreciate that. We love process. We love systemization. I know that we discussed the Empowerment Fund when we first were getting onto the call and reconnecting and reminiscing. Empowerment Fund is a phenomenal organization dedicated to changing the world through entrepreneurship, financial literacy. One of the things in which we do, in which I do, is I take all of the different processes that I've seen across conversations like this, that I've used in practicality of experiences of companies that I've been part of, ventures, et cetera. And I put it all together in this Simple Profits program, which is literally practical blueprints of systemizing a business, in a sense, putting processes in place to be able to get a company from scale to sale. And it's free, right? So it's made available universally, open IP to anybody who wants to come in and take advantage of it and use it. It's made available through the Empowerment Fund. So we are only making it better with this conversation, and you just strung our heart, a chord of our heart, because systemization and processes we truly believe in. If somebody's already figured out, why reinvent the wheel?
Love it. It's awesome what you guys are doing. It's I'm a big fan. It's really cool. It's cool to see. And again, like if you can save yourself time, like, you don't need to be reckless and try to figure it out on your own. Like I did it the hard way, and I wasted a lot of time, to be honest. And so it's second time around is a lot easier, but it's because I took a lot of lumps, the first time, and these resources weren't available in 2007 or 8, right? Like there was
Seriously.
like very few blogs didn't exist. So it's, YouTube was sort of just getting started and no one was talking about startups. So this is such a great thing that you're doing, and hopefully it's awesome how people can take advantage of it.
Love that. I appreciate that so much. As we wrap up here and close it off, one thing I always like to ask is, so you just helped everybody solve their problems on this call. And I always just like to ask, is there a problem that you're focusing on right now that you could get help with solving? Because maybe somebody from our audience, maybe somebody from the network could actually come in and lend a hand there. Get more by giving than by taking. You just gave us a ton of value. Figured, might as well ask to see if there's something that you could get in return, or if some way somebody else can help you.
It's a good question. I mean, we're always looking for more customers, more feedback. Obviously, it has to make sense. But if anyone is in a position where, as a founder or as a, someone who deals with customer success, we'd love your feedback. If nothing else, if you have it on, is this a problem you're facing, and what would you like to see in tool? That stuff is super helpful. Like what we've been talking about on our team is right now we're optimizing for learning that versus anything else. Like we're not trying to make the most money possible. We're not trying to be the most efficient because we're spending time doing things that don't scale and that aren't highly efficient yet, because we're learning to hit sort of that product market fit, as cliche as it is. So we feel good about it, but it's part of it is learning, right? Like you have to make those modifications and adapt quickly in the beginning before a few degrees off course and you end up pretty far away from your target, in the early days. So we're really trying to be, pretty accurate in hitting the mark.
Love that. Talk about eating your own dog food. I mean, that is literally the heart of this conversation that we had today too. And I love the fact that that's what you leaned into definitively. I mean, just talk about like a stamp of literally like truly approval in a sense of practical advice, to a real world problem. Jeff, hopefully there's folks in the audience, and I'm sure there's probably ways that even if we jump off here, we could figure out to be able to actually drive that as a solution. Lots of folks that have this problem that I'm sure we could also drive connection with. And if there's some way that we could get some sort of structure in place or process in place to be able to collect that feedback in a practical manner, I'm sure there's a lot of people that would be more than happy to help out and be able to provide that. Jeff, on that note, we appreciate you spending the time. Hopefully I can get you back on the show too, because I think that there's so many nuggets that we can hopefully extract from your experience. I mean, you literally ran a successful referral company for a long time. And that has been a very hot topic for a lot of our audience. It's been a request of how do you put that together and run it successfully. I'm sure there's also other things as well. So hopefully this is not the last time that we get to see you or hear from you, but we do definitely appreciate this time.
Absolutely, my pleasure, and happy to chat. A lot of lessons along the way. Like I said, I took a lot of lumps, but have a lot of at least experience in dealing with a lot of different problems, and happy to share them whenever it makes sense for you guys.
Love it. All right, Jeff, thank you.
Thanks so much.